Good morning. We are here at the 2018 Chicago Traders Expo. I'm Marvin Appel of the Systems and Forecast Investment Newsletter. I'm here with Jay Soloff of Investors Alley, and his newsletter there is called Options Profit Engine. Good morning, Jay.
Morning.
I wanted to ask you some questions about how you identify what are attractive options trades for your readers to start opening.
Absolutely. A good question that can be very complex, but because situations are always changing, but it's generally a combination of indicators, basically what is going on in the market, but also individual. I'm a volatility trader, so to speak, although not every single one of my trades is necessarily a volatility trade, but I do look for times of higher volatility, and I try to sell that, but that can be in an individual stock or it can be in the overall market. So it does change quite a bit, and there are several factors, but I'd say to simplify it as much as possible, that is what I'm looking at.
Okay, so when you say you're a volatility trader, does that mean your trades are mostly delta neutral?
They are. I try for them to be delta neutral, but sometimes I will lean a direction, and I think the issue with delta neutral trading as a former market maker is that it can be pretty capital intensive, and so I want to have trades that are accessible to people with a limited trading account. So I might lean a direction, or I might do something like an iron condor, which is a sort of delta neutral trade that doesn't require hedging with stock or something like that might end up being expensive.
And your readers are mostly individual investors? Individual investors.
We'll get some financial advisors. We don't. It's not like pension funds, right? It's going to be people with money they want to manage, but something that they want to do themselves, or a lot of times just people who want to kind of accelerate the yield on what they're making, because maybe dividends aren't paying enough, or fixed income is too low. So it's just something that is a way to kind of amplify their yield in a relatively safe fashion.
How many positions do you think an individual trader can diligently monitor at any one time?
A lot of it depends on your software.
Okay.
But I don't like to have more than 5 to 10 on at any one time. We're talking about trades that maybe will expire within a month, right? So I'm not talking about like retirement positions or something like that you might hold for 10, 20 years. But for trading, I like to keep my positions like under 10, generally closer to 5, just because if things get crazy, I want to be able to quickly manage those positions and not have to go through a whole list of things. But again, like sometimes software makes that really easy. So like there's market making software that allows you to monitor 1,000 positions and do so effectively. but for individual traders, I think the smaller the better.
So you mentioned being a market maker previously. Is there any way in which an individual trader can have an edge over the people on the inside, or do the market makers really have an advantage?
These days, I'd almost say the market makers are at a disadvantage, because there's not a lot of. When I was a market maker, you made money by the edge on the bid-ask spread. Now most of the highly traded stuff, they're a couple cents wide. So, position trading is I wouldn't trade for edge as an individual trader like that. I wouldn't try to capture. You're going up against the high frequency guys, and I believe position trading is the way to do it. Have a set thesis and let that play out, and take advantage of high probability, mean reversion, things coming back into the norm. I believe that is the edge that we have over market makers who have to take two-sided positions over stuff. So I believe very strongly in that. The question is the market going to cooperate overall? Because obviously there's the unknown stuff that happens where things go crazy, and you have to be prepared for that inevitability.
Okay. And you mentioned position trading, and you mentioned 1 month. Is that your preferred time frame?
Yes. Yeah, I like to do things 30 days early, just because in today's environment, 30 days already seems like a long time. Over the course of 3 months, you never know what could happen at a political or economic level. For instance, 3 months.
Right. All right. Well, thank you very much, Jay.
Thanks.
We have to take a break. To our viewers, thanks for tuning in. We'll be right back with part 2.